More exciting in rates, but it's been tremendously boring in the credit markets up until the beginning of November. It was the most boring year ever in terms of the trading range, 10 basis points.
Yeah, so come on, tell us why. I think I know the answer, but it's for you to tell us why the credit markets have been so swan-like. They've been so stable despite everything that's been thrown at them.
I think one of the reasons is because there's been a lot of support from the central banks. That's definitely been part of the case. Secondly, we've got to valuation levels where people don't feel like pushing it any tighter. So even though the news flow has been okay, the valuations were more or less kind of not quite rock bottom, but tight. And then the third thing is that companies did take advantage of all the fiscal support that they had in 2020 to actually delever the balance sheet. So there was some good news, which justified the fact that spreads were relatively tight.
Yeah, and I hear what you're saying is they just don't push it any tighter because of their concern about what's going on and whether some of that support will be pulled away. But let's spin forward. Enough about 2021. You're actually thinking that 2022 is going to, my words, not yours, going to become a little bit spicy.
Exactly. Well, the problem is that we've got a couple of issues which I think are in the background. The first is that we're definitely seeing weakness in the Chinese property market. Now, your first instinct might be to say, what does the Chinese property market have to do with the European credit markets? And the answer is that if Chinese property prices decline by up to 10%, which is what we expect for the next 3 to 4 quarters, then Chinese consumers will feel a lot poorer, and so they'll stop buying European luxury goods and European autos. So that's one sector where we think there's going to be a problem. And the second issue is the whole green transition, which is going to be pushing companies to actually increase their investments. And that's going to need to be paid for in the credit markets. So we're going to see an increase in terms of leverage on the balance sheets of companies. And that also is going to push spreads wider. So we're quite gloomy, actually, in terms of credit markets over the next 3 quarters.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.